Is the 4-year cycle at risk of coming to an end, and how are the charts looking? Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be taking a look at the 4-year cycle, the macro charts, the total cryptocurrency market cap, and the short-term price action, answering very important questions. Is the 4-year cycle still valid? How are the macro charts developing? And of course, what is happening on the short-term time frame? Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, Bitcoin, and the relevant economic news. If you are interested in our VIP group, you'll get access to trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to our group chats, our trading chart and education chat, our news chat, our help chat, our trade setup chat, our daily video chat, and of course guys, everything in here is part of the community. You can engage with other community members, or over 600 members, help each other out and develop as a team. If you're interested in getting access to that, go ahead and contact me in the pinned comment of the free channel for more information, and you can view our entire trading track record since February 2021. Let's go ahead and dive on in. So in today's video, we're going to be taking a look at this chart, discussing the 4-year cycle in quite amount of depth, but not only the 4-year cycle, discussing how the macro charts have developed in the past, how we expect them to develop in the future, and taking a look at the current health of these charts on a macro scale. We'll also take a look at the total cryptocurrency and total altcoin market cap, discussing what is happening here and our next levels of potential resistance. And we'll also go over the short-term price action, discussing the next likely target for Bitcoin and the levels we are watching moving forward. So starting on that market data today, taking a look, 24-hour volume has jumped up 17%. Of course, we're coming out of the weekend now, so we're going to start to see volume and volatility start to move upwards. 54 billion in total. 24-hour liquidation is sitting at a total of 71 million, at 73.1% up over the last 24 hours. Of the 71 million, 55 million have come from long positions and 16 million have come from short positions, as Bitcoin saw a short-term correction toward the downside after being unable to break through that downtrending diagonal resistance after around 5 or 6 days of attempts. So we saw a breakdown, we saw a short-term breakdown, back down to around 42,000, and we'll be discussing what that means in today's video. Moving over to the DXY is still green, still moving upwards. Again, an area of support. We held this area of support for about half a month. We have bounced from here. We have moved up to our new and initial local area of resistance. We'll go ahead and chart that one out. You can see above this red box, this is going to be our local area of resistance. A break above this level will result in a move back to this 105.5 to 105 level. Of course, these areas will act as resistance points, so potential rejection on the short term from here for the DXY might be possible. Moving over to the broader markets, the S&P 500 did reach our 5,000 target. Again, we discussed that in yesterday's video. The 5,000 target being a psychological level of resistance. We are in price discovery. Technically, we have not been at these levels historically. We are at new all-time highs, and therefore we haven't got any data because, again, TA, resistance and support, all that stuff is built up on prior data. So we have to look forward and make assumptions to where these areas of resistance are going to be. And generally, people, psychological creatures, we work on whole numbers. We're drawn to these whole numbers, so $5,000, a nice round number, is going to be an area people put their sell orders, and that is why we saw 5,000 act as a point of resistance. This area is now the immediate local resistance. A breakthrough this level sends the price action upwards, whereas if we fail to get back above here, this will act as a level of resistance that could push the S&P 500 back down to retest our 4,800 area of support. Moving over to the Dow Jones, we are still expecting the Dow Jones to climb just a little bit higher. We are looking for $39,000. We are sitting at around 38,760 at the moment, so we're looking for a little bit of a push upwards, but again, similar principles here to the S&P. This is going to be a psychological area of resistance, as it is a nice whole number. This is going to be our area of support. So anything over here sends us higher. As we approach this area, the probability of a rejection starts to increase, and if the rejection results in a breakdown of our prior range low at 37,700, we can see a weekly shift in the trend downward. So watch that, guys. Keep that in mind. We have seen a massive rally for the traditional markets over the last 4 months. Of course, we've seen a move from 32,000 all the way up to close to 39,000 on the Dow Jones, S&P 500 from 4,100 all the way up to 5,000. Significant rallies. I wouldn't be surprised to see some sort of weakness develop from these levels. Let's go ahead, guys, and jump over to Bitcoin. Now, before we talk about Bitcoin, a quick word from Bitget and BingX, and we'll jump in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and jump over to Bitcoin. So we're going to go ahead and start today's video on the short term and then zoom out to the higher time frame charts. So as we mentioned a few minutes ago, we talked about how Bitcoin has been unable to break past this downtrending diagonal resistance for the past 5 or 6 days. So this downtrending diagonal resistance is going to be a very valid point we are watching moving forward. This acts as a trigger point. This is our downtrending diagonal trigger point, which we are watching for a breakout for a continuation higher. So first and foremost, guys, I will go ahead and mark that level on your charts as a potential long trigger, meaning if we are able to break above this level, we are going to be expecting the price action to have as a result shown a significant amount of strength, which should push Bitcoin up to retest that range high resistance we retested for numerous weeks until we finally broke out and sent the price to 48k. This area is still a major area of resistance, sitting at the 44.25k level. Our current horizontal resistance matches up with the confluence of that diagonal resistance, and thus a break of the diagonal trend, which is the short-term downtrend, should facilitate a rise in price that could reach at least 44,250, which is going to be that initial target. So initially, guys, watch for that trend line. A break of that trend line will very likely push Bitcoin higher. We are taking and looking to take alongs upon that breakout. That takes us to our next level of resistance, the 44,250 level. And we'll discuss this a little bit more in today's video, as it does apply to a higher time frame chart, and we'll come back and talk about it. But to summarize it, a break over 44,250 would actually flip the momentum on the daily chart positive, and that would very likely push Bitcoin to retest anywhere between 46 to 45,000, where we do expect a rejection from. So we would expect a break into this range and then a rejection back down from that range. So if you're looking for longs for Bitcoin, I'd be exactly waiting for a break of this level and waiting for a break of this level for 2 different potential entries. Until those things occur, Bitcoin is in a downtrend, okay? we are in a overall downtrend right now. What we have seen in the few weeks that have just transpired, we saw a uptrend, right? We saw a move down to 38K. We saw a nice deviation below. We broke back above $40,000, entering a short-term uptrend. The uptrend has been held for the last couple of weeks until we recently broke down from this uptrend just a couple hours ago. And again, the uptrend broke as the price action was unable to push higher, and that trigger point to push higher is reflected by that downtrending diagonal trend line that again we were unable to break above. So Bitcoin is currently in a short-term downtrend. The short-term downtrend is by all means, as you would expect, reflected by this diagonal downtrending trend line. So I'm going to go ahead and add an arrow to it now. This is going to be the current trajectory of price action that we are traveling in. Let's go ahead and take a look at our support levels. If we look lower to where we are now, we can see we have a few minor and major support levels. Our minor support levels are going to be these two black lines, specifically the range lows of the current consolidation range. We can see this area acts as an area of support. So this area between the levels is an area of support. Thus, if we were to continue in the current trend without breaking above this diagonal downtrending resistance, the logical target for Bitcoin is going to be a retest of this range low. This is going to be the logical downward target initially for Bitcoin if we fail to break above this downtrend. Okay, knowing that, that leaves us with a very small range of price action. Range of price action is the area between the downtrending diagonal trend line and the uppermost level of support. This range of price action, this is what we would call a chop zone, as there is not enough volatility and clear, concise movement to really define the trend. The trend is more or less moving in this sideways direction against quite a, not a very steep downtrending diagonal resistance and a flat horizontal support. So what we're looking for directional continuations, like we said before, for a bullish continuation, we look for a break of the trend line. For a bearish continuation, we are looking for a loss of the lowest point of the support, which is sitting at 41,700. A loss of 41,700 will very likely push Bitcoin back to 40,500. We are looking for that midline, okay? That midline of the horizontal support line. Why are we watching for the midline? If we look back at prior price action, almost every single retest of the upper level of the support resulted in a liquidity grab toward that midline level. So we are looking for a retest of that midline for a potential bounce point. What does that mean? A loss of 41,700 could potentially open up the idea for some shorts down to 40,600, where you then 40,500. Where you then could potentially flip long again. So watch out for the short term, guys. Keep your eyes on that. Let's go ahead and zoom out our perspective a little bit. So zooming out our perspective, like we said, we've got some very key levels. More importantly, now we're looking at the 40,600 level, 46,000 level, and we're looking at the 38,000 level. So on the bullish case scenario, a break of 44.25k, like we said, will result in a move up into our 45 to 46k range. A break over 46,000 is what we need for a high time frame continuation upwards back into that major level of high time frame resistance at 46 to 48k. If we want to retest this high over here, we need to get back above that 46k level. Okay, perfect. Moving over to the downtrend side, if we look for a correction and we want to see a correction into 38,000, which is going to be the 50 EMA and the lower point of support of the current high time frame horizontal range, we need to see a breakdown of 40,200, which is going to be the range low of the current lowest high time frame level of support. Okay, so a loss of this range low will result in a fill of a gap closing between these two points of support, and the price action should reach 38,000. It is only when we break below 38,000 and as a result lose that 3-day 50 EMA will lower targets become viable. And by viable, I mean the next level of support below 38,000 besides mid levels of support, 35k, 36k, we look for the next high time frame level, which is actually sitting at 32,000. So the range between 38 to 32 becomes a viable target or a possibility if 38,000 is lost. Until then, support is support until it's not, and therefore you should not be expecting 32k unless 38k is lost. On the flip side, I wouldn't mean, oh, you should expect over 48k right now just because you don't expect 32k. That's not what I'm saying. I'm just saying, according to what we're seeing in the charts, there is nothing to suggest we should expect 32k right now, as the level of high time frame support is still holding. That doesn't go to show that Bitcoin's looking strong. Bitcoin's looking quite weak over here, like we said. Unless Bitcoin breaks above these trigger points, specifically 46k, we are looking relatively weak on the hourly and the daily charts. So let's go ahead and talk about what this means on a macro scale, how the price action is developing, some concerns I have, and of course the 4-year cycle. So moving over to the macro charts over here, guys, we can see we have the monthly 4-year cycle, and of course we have the weekly 4-year cycle. Really quickly, let's go over the weekly chart. So the weekly chart over here is going to show you the 4-year cycle over the 4-year periods. We have cycle 1, we have cycle 2, cycle 3, and each yearly block is blocked out year 1, 2, 3, and 4. 4 being the bull run phase, okay? 2 to 3 being the accumulation phase, and 1 being the bear market. So we see the bear market in the first year, which results in the high to the low. We see accumulation in the first and third year, and then we see the bull run in that 4th year. During the 3rd year period, which is the period we are currently in, we generally see nearing the end of the year, November, December, a retest. Okay, we'll show you a retest of the prior all-time high. This is the 3rd year. We see the price action retest just at the end, okay? The prior all-time high. We'll show you the next cycle. If we move over to the next cycle, we can see just at the end of that 3rd year period, we see a retest of that prior all-time high. So we've seen that 2 times. And as we know, that is strong enough to suggest some sort of pattern. We do need 3 times to validate the trend, but 2 times is enough for us to open the possibility to the fact that it could occur again. So 3rd year is this year. We would expect to see if the price action behaves as it has before at the end of this year, or by the end of the year, a retest of 70,000 or that all-time high of 69,000 according to historical price action. So that leaves Bitcoin in a bit of a predicament, and that is Bitcoin has from the 48k breakout, it has a 48% gap between that 48k level to 69,000, which means Bitcoin, if it were to break over $48,000, and we have seen in the past, guys, the $48,000 level is the dead cap bounce high, okay, the dollar trend line, the dead cap bounce high after the bear run has initiated, okay, that first bounce, that dead cap bounce high is the dollar trend line. We have seen in the past, every time we close a monthly candle above that dotted trend line, so we'll show you here, monthly candle close above the dotted trend line, monthly candle close above the dotted trend line, we generally then initiate a very steep macro uptrend, which results in the bull run starting. Okay, more importantly, when we do break above this level, within a handful of months, we actually reach that all-time high price from the prior cycle. And that opens us up to a bit of a timing predicament. If Bitcoin were to break over 48,000 initially, right now, it would be almost too soon according to the 4-year cycle and according to what we have seen in the past. That will result in 1 or 2 things happening. Number 1, the 4-year cycle breaking, or number 2, we get an early bull run, both of which will result in the 4-year cycle actually breaking. And that would again open us up to 2 more scenarios. Scenario number 1, we play out as expected, which is we only see a break over that dotted trend line after the halving event. If we look at the prior breakouts, we have the halving event represented by this green line. The halving event represented by this green line, we can see we have a monthly candle close above that 48k or that dotted trend line level only after the halving event, which opens us up now to a 2-month period, which is 72 days, okay, of potential correction environment or sideways price action environment until we expect a break of 48,000. So according to historical data, the 4-year cycle is currently intact and everything is moving as expected. The big question and the big thing everyone's kind of freaking out about is, are we going to see a high time frame correction? And if so, how low will it go? And if it goes low, at what point do the macro charts invalidate the 4-year cycle? So let's answer that. according to historical price action, according to monthly data, what we have seen in the past is every single time we retest, and let's go ahead and just get all this stuff off the chart, every single time we retest that dash trend line, we do see a correction. In this instance, we saw, guys, a 29-30% correction. If we take it from the peak, it was actually more like a 40% correction. Perfect. If we look at the COVID-19 correction, or even if we ignore the COVID-19 correction and just take a look at the correction following the break of that dotted trend line, we can see in the months to come, we saw around a 40% correction. If we look at the current price action, we can see, again, we broke above that level, and so far we've only corrected, well, we went down to about 38,000, so we corrected about a 21% move. If we were to correct around 40%, that would unfortunately take us down to 28,000. Now, the reason I don't think we will see that is because if we do look at historical data, in both scenarios, neither of those corrections resulted in a monthly close back below that horizontal trend line. The horizontal trend line is going to be 32,000. The 32,000 level actually indicates the point of which we enter a monthly uptrend. So the monthly uptrend trigger point is retested in one instance during COVID-19, not in the other instance, but in both instances, we do not see a monthly candle close. So that goes ahead and tells us if we do see a breakdown of 38,000 and we do see a correction, we would not expect a monthly close under 32,000. And if we had to get a monthly close under 32,000, the macro charts would look very bearish, and particularly the 4-year cycle, as we would see something that has not yet played out on those high time frame charts. Thank you for watching, guys. Let me know what you think. To summarize everything, we don't expect an immediate break over 48k. We never did. If you've been watching the channel, guys, we've been telling you back from here, from the $19,000 level. We told you the bottom was in here. We told you we expected 32,000. At 32,000 right over here, we sold. We looked for re-entries at 25.2. We told you then a break on the monthly chart of 32,000 will result in a move to 48,000, and we will reject from 48,000. We've said those of absolute confidence. If you don't believe me, all the evidence is on our channel. We can't go back and edit videos. It is all there. You can watch it. I'm 100% confident. We've said that hundreds of times on this channel. You can check it out. So we've always expected a rejection. We also are now saying if we do break a monthly close over 48,000, we will see a continuation back to the high. The question is, what are we going to do between now, okay, right now, and the halving, which is the red line? Are we going to see a pullback? Are we going to push sideways? Are we going to go up? The biggest question, and unfortunately, we can't give you a definitive answer. We have to watch what the charts are doing. Watch the short term. The short term determines everything, guys. If we see a break of 46k, that is going to be fantastic for a move upwards. If we see a break of 44.25k, that is fantastic for a move upwards. If we see a loss of 40,000, we start to look very, very grim, okay? If we see a loss of 38,000, guys, it's starting to fall apart a little bit. You should be very, very worried. If we lose 32,000, it's pretty much over at that point, okay? So watch these levels. It is very, very important what happens on these levels. Particularly, these levels hold such high time frame confluence and such significance on the high time frame in regards to the current trajectory of the macro trend. If we really go ahead and, you know, take it for what it's worth and zoom out over here, we are really, realistically, we'll just go ahead and extend the video a little bit longer over here. What we are essentially doing is we are essentially consolidating very, very tightly, okay? Let's go ahead and delete some of these lines in this range here. The range between that 40,000 support and that 46k resistance. That is what we are doing right now. So a breakdown of this level invalidates deviation, okay? And we result in a downtrend. That's what happens, okay? A break up from this level results in a break from this consolidation range and a break upwards. What does that even mean? Ask yourself, what does that mean behind what the price action does? It tells us that during this range of consolidation, even though we had exhaustion, the bulls were able to step in, absorb the selling, and still push the price higher. If that happens, that would be significantly bullish. Massively bullish, guys, particularly where we are on the high time frame. Whereas on the flip side, if we were to break down, that would suggest during this period, the bulls were unable to sustain the price and did not show enough confidence in the price at where it is, and thus the bears were able to push the price downwards. That again would show high time frame weakness and would be very, very bad. So think more about what is going on behind the scenes of what drives price action, more so than just what the price action is doing. Remember, the price action is a direct result of buyers and sellers, and buyers and sellers make decisions based on narratives, make decisions based on emotion, make decisions based on risk climate in the market, potential upcoming releases or news events such as the halving event, okay? Or even some people are just straight out gamblers, which influence the market a little bit too. So you have to think about all these elements in regards to how price action moves and what price action is doing, specifically what it means when it does certain things. For example, I'll give you one more example before we finish up the video. If we look at this formation over here, this descending descending wedge formation we had over here. This descending wedge formation over here, we had a bullish divergence, okay? We talked about this. We did a video of this right over here before we even broke out. You can go back on the channel. We did a video of it. We talked about how this was a prime example, okay, after an extended downtrend, that the bears were starting to lose control, as it represented bearish exhaustion as the bulls were starting to absorb the selling, as the price action was starting to flatten out after an aggressive trend. When we see the trend angle shift, okay, we have a trend angle. Okay, here's a trend angle. We draw from the top, and it's very, very, very brief, 45 degrees, okay? And then the trend angle shifts, okay, to whatever that is, 19 degrees, okay? That is an indication that the strength behind this trend is starting to exhaust, okay? Which means we are seeing reversals develop. So the same thing can be applied on any time frame, guys. Think about why price action is moving. Don't just look at a chart. Don't just draw a shape. Your job isn't to draw shapes. Your job is to actually identify the meaning behind the price action, and thus you can come to conclusions. Thanks for watching. Catch you guys in the next one. Cheers.